Today, welcome to the channel Study Creatively. This is a part 2 of the chapter Comparative and Common Size Statement. Hope you will like, share and subscribe to this channel. Now, without wasting further time, let's move on and dive directly into the chapter, which is Comparative Size and Common Size Statement. Now, into this chapter, what we are going to be looking at, balance sheet and the profit and loss account. See, about profit and loss account we have already talked about in the part 1, that how we have to prepare the common size, how we have to prepare the common size statement, and how we have to prepare the comparative size statement. So about profit and loss account we are very clear. We will be looking at the performer and then we will be moving directly to the balance sheet, comparative and common size. Basically I will be showing you the performer of balance sheet and then I'm going to be telling you what happens in comparative balance sheet and what happens into the common size balance sheet, and then we will be looking at the question in the next part, and therefore this chapter is going to get completed. So straight away let's dive into this chapter. Now in this chapter, first look at the balance sheet, or if you don't want to first look at the balance sheet, what you already did was profit and loss account. So you have idea from the previous videos about profit and loss account. So this is your profit and loss account, which has this performer. Firstly, name of the company, then there is statement of profit and loss for the year ended, then there is particulars, note number, current year, previous year. Remember, this is just the format here. I have not talking about comparative or common. Comparative and common I have already talked about in the part 1 related to profit and loss account. So in this we are just looking at the performer. That is really very important to talk about and to have in mind. Now if you look at this performer here, into the first part you have few heads. First head was revenue from operations, then the second head was your other incomes. When you added the first two, that is revenue and other, you get the third, which is total revenue. First plus second one gives you total revenue. After that, at the fourth you have expenses to look at. Now there are few expenses which need to be in this order only, like firstly the cost of material consumed comes, then purchase of stock in trade, then changes in inventories of finished good used to come, then work in progress and stock in trade, then employee benefit expenses, finance cost, depreciation and amortization, and at the last other expenses used to come, like the other incomes in the revenue case. Now revenue from operations I have already told into the previous video that it refers to the sales and expenses. Then when we are going to be talking about total expenses, total revenue, now we are going to be talking about profit before tax, which is 3 minus 4. 3 minus 4, like more to the 4, it has to be this total expenses. So total revenue minus total expenses will give you profit before tax. After having profit before tax, you have to less tax, and then you will get profit after tax, and that's how you complete your profit and loss account. And then if it is going to be your balance sheet, see, remember, if there is going to be the comparative size statement. Okay, so let's suppose we are talking about comparative size statement of P&L. So what's the difference between comparative and common? Let's talk about that also. Now in comparative you have 4 columns to be made in PL account. A is going to be the figure at the current year, then B figure of the previous year, then C A minus B current year minus previous year, then at the D you have a percentage which is calculated by the formula C upon B, that is change upon B, which is previous year, into 100. So this is how the 4 extra columns that you have in comparative P&L. Then common P&L, you have current year, previous year, the ones you have been given into the question. Then what you have to calculate is percentage RFO net sales, which is percentage revenue from operations, and this is the net sales that you are going to do. You will have current year percentage, you have previous year percentage. Okay, then this was about common size income statement and comparative income statement. Then after that we have balance sheet to look at. Now if we talk about balance sheet is going to have equity and liability. It has the first as shareholder funds, then it has equity, share capital, preference share capitals, non-current liabilities. Then we have something to say like non-current liabilities, long-term borrowings, long-term provisions. These are the subheads of the current head or the main head was your non-current liabilities, and long-term borrowings and long-term provisions are your uh, uh, subheads. Then current liability, another main head under the column equity and liabilities. You have four other subheads: short-term borrowings, trade payables, other current liability, short-term provisions. Then you have total. Then asset side, you have non-current asset, current asset. Non-current asset has three things: fixed asset, non-current investment, and long-term loans. Then if you look at the current assets, it just have six items that I haven't talked about here, that will be covering soon. Okay, so these are gonna be the format for the balance sheet. Now if I talk about how common size and comparative look like, it would be in a way like in comparative, like first let's talk about what happens in the common size balance sheet. In common size balance sheet, you have an extra two columns, which is current year percent, previous year percent. Then when I'm gonna be talking about format of balance sheet comparative size, then into that case we are just going to have figures for the current year period, and then the figures for the reporting period, which is already given into the question. What we have to calculate is column C, A minus B, absolute change, then percentage change, increase or decrease. So it is somewhat similar to the P&L, but just the profit, the way of presenting the things are different. In balance sheet we talk about asset and liabilities, in PL account we talk about our incomes and expenses. So that is only the difference that we could look at the two things. One is your statement of P&L, another is your balance sheet. So till here we just talked about the format, concepts, and the basics that need to be made, and I hope you are very clear with all the formats that are needed to made. And that's it for today. Now from this we are clear with all the, or done with all the concepts that need to be made. Thank you, keep watching, like, share and subscribe.